Right, let us get a view from Wائل Makaram, who is Senior Market Strategist at MENA at Exness. Good morning to you, sir. Thank you for joining us. Happy New Year. So, look, there's an enormous number of geopolitical concerns we have out there as well. You have made a point in your note about the tensions between China and the US and the impact that could have. Just tell us what your thinking is and what you think that's going to do to the dollar and to asset classes in 2023. Good morning, sir.
A very good morning and Happy New Year to all of you. Wish it's going to be a good year, hopefully. Unfortunately, we've been seeing lately a lot of tensions, and especially the competition, the economic competition is super high. The United States is trying to just stay in its position as the first, and now China is trying to recover from what's been happening for the past 2 years of COVID. Finally, China is taking a position of abandoning the zero COVID policy in a way to try to recover on the economic perspective. However, we're seeing the U.S. economy is still strong. Economic indicators are still showing some strength. When it comes to monetary policy, we're seeing clear divergence. The Federal Reserve is tightening monetary policy to combat inflation, while the People's Bank of China is trying to support the economy as much as they can, and this is just creating a lot of volatility in the markets.
Yeah, and I take all that on board, but just specifically about the points that you've got in your notes here about the tensions between China and the US. And look, nobody wants to see any war. Nobody wants to see another war, especially after the evidence of how horrific it is in Ukraine as well. But do you believe that tensions over Taiwan in 2023 are actually going to get a lot hotter?
I believe what's been happening is definitely no one wants war, but the thing is they're trying to, like the States is trying to lead the race economically, trying to sustain its position for the next years. However, China is trying to keep up. We're having a lot of challenges in China, and 2023 is the year to make or break. Definitely, we're looking forward to the reopening of the economy, to the consumption coming back again. And now you've been talking about the borders opening again after 3 years between Hong Kong and China. This could be a little bit interesting. But in the end, what we all want to see is a bit of improvement in economic activity globally, and not just going into some clear tensions and clear fights that could hit sentiment, which is already under pressure. And especially after yesterday, for example, the FOMC minutes showed that we're going forward with more interest rate hikes, and this is not very good for sentiment globally.
Can I switch focus, Wa'al, and just ask you about the prospect of making money in Middle Eastern markets through 2023? It was a bit of a mixed bag for 22, and you could see that some of the IPO momentum started to wane towards year end, but we've seen that in other markets as well, obviously. But what do you think the outlook is for many of the markets in your region?
Actually, we're seeing a lot of incentives from governments to try to support the economy, especially during 2023. We've been seeing governments benefiting from higher oil prices, which wasn't good for the rest of the world. However, we don't see this could be sustainable during the second half of 2023 unless something happens to the production side. If we lose something related to production with the tight capacity that we have, this could push prices higher and governments could benefit. If we're going to focus on the sentiment in general, definitely we're part of this world. We're being affected with the overall negative sentiment around the world. If the Fed keeps hiking, if all central banks keep hiking, this will continue also to happen in GCC countries, and definitely will create some more fear when it comes to the stock market, as there could be some alternatives to investors.
Yeah, absolutely. I mean, the perception with many markets obviously will be that connection with the energy price, and the Saudi market I think saw a rare down year in totality. How much of a focus do we need to keep then on these headline energy prices as we assess some of the performers?
Talking about Saudi, they're trying as much as they can to diverge to diversify their investments. They're going more into non-oil sectors. But definitely, as you mentioned, oil was one of the key supporters for the move that we've seen in 2021, a little bit early 2022 before reversing course. So if we see a little bit of improvement, or at least oil prices staying between a range of 70 and 90, this could be very welcomed by the region, and this would definitely lead to a little bit more optimism. Governments will have more income, and they will be able to spend more and invest more, and this could come back with better economic opportunities to the region in general.
Well, can I ask you about cryptocurrencies? It's been such a roller coaster in recent months around what we've seen with the FTX being the latest scandal, of course, and Dubai, the market there, fairly huge as a crypto hub. What do you think the ramifications are for 2023 for the crypto market?
Actually, the crypto market, as you mentioned, has been hit with a couple of events, among them FTX. Prior in May, we witnessed also the Luna collapse, and all this did hit definitely investor sentiment and even trader sentiment. We're seeing volatility, volumes are going down. And this is also related to another thing that's happening to all other asset classes, which is the tightening that's happening by different central banks. So as long as we don't see any change in any of these courses, the market could still be under pressure. One of the positives that could come into 2023, if we see any twist in monetary policies by the Federal Reserve, a little bit of a pause that could just support risky assets or risky investments, this could just flow some funds to crypto markets.
Well, where do you think that leaves the US dollar? Because we've seen the US dollar trade as an all-weather currency at certain times. Risk-off moves, it's defensive. Risk-on moves, it becomes a risk-on trade. How do you view the US dollar in that context?
Actually, if we have a look at we're seeing volatility during the first couple of days of the trading year. However, what I'm looking for actually is when the Fed, like the market has been pricing in a 25 basis point and the next meeting and 25 in March. So it's a total of 50 basis points. Yesterday, it changed a little bit after Kashkari's comments and after the Fed minutes. However, what I'm looking for actually is this week on Friday, the earnings, we're expecting a 0.4% increase, which the Fed won't like. And also participation rate is still at the lows. Next week, we have the CPI. The base effect of the CPI reading could be little less than the prior reading. So this could put some upward pressure. These could contribute to a change in the market's mentality that the Fed would be stopping at 5% and push it a little bit higher towards 5.25% and 5.5%. And when we see this happening, definitely this could be supportive to the dollar. But we just need to look for this piece of data that could support this additional increases by the Fed's rate.
Well, we're obviously very focused on the growth slowdown broadly and some of those geopolitical risks, as you've been expounding on very clearly here. I just wonder if there is a non-consensus trade in your part of the world, what would it be?
Actually, when it comes to the slowdown that you're talking about, if we just look at it's happening with different sectors. Like we're seeing the manufacturing sector is dropping significantly, even prices dropped and everything, while the services sector is still booming. I believe going towards the middle of the year, when we have a little bit of rest when it comes to policies, these pressured or stressed sectors that faced the terrible 2022 could be having a little bit of a good relief, and then we could see a momentum trades towards the end of the year in these sectors, and this could be a bit of reward to investors.
Good to hear from you this morning. Well, thanks for joining us. Wائل مكارم, Senior Market Strategist for MENA at XNES.